Hello and welcome to the FOMC preview video. So just going to take a quick overlook ahead of Wednesday the 31st of July decisions from the FOMC. So that's expected at 7 PM London, that's 1 o'clock New York and 2 in the afternoon in Chicago. Now firstly, it's worth a note that we have no meeting from the FOMC in the month of August. The next one after that will be September, and that's when market participants currently expecting the first tapering move. Now in terms of what to look out for from this July meeting, expecting no change to the pace of monthly bond purchases, so that would be a large surprise if they made any move. That current pace is 85 billion in terms of treasuries and MBSs, so 45 in treasuries, 40 in MBSs. But there will be a lot of focus this month on the Fed fund rate. So current guidance is for around the beginning to mid 2015 in terms of the first rate hike. Now in terms of their unemployment threshold, the Fed would like to see unemployment below 6.5% before raising rates. Now, with a lot of Fed speakers and also Bernanke himself wanting low rates for a longer period of time, expecting that 6.5% threshold to be lowered. Now, if we see this, could see a move in terms of short-term interest rate. Eurodollars could see some upside following this move. But again, no expectation in terms of the change of monthly bond purchases, and as already mentioned, that's expected in September. So any suggestion and guidance or more explicit time frame for this could likely cause aggressive price swings, especially if it's going to be pushed back to later in the year. That's likely to support equity markets, treasuries, gold, and also pressure the dollar as liquidity in the markets continues. Now they're the main points to look out for. Also worth a note, on the same day as the FOMC, we have the GDP reading from the US, and that's expected to be revised lower to 1%. And we also have the US Treasury's monthly bond purchase schedule an hour later than the Fed at 8 PM London time. But that's enough for me in the meantime. Hope you enjoyed the FOMC and thanks for listening.